Welcome back to Marlow's Mortgage Minute. This is Andrew Marlow, your trusted mortgage loan officer here in Las Vegas, Nevada, going over the tips and tricks in the mortgage world. Today, we're going to be exploring some different options for people if you can't get qualified by a traditional mortgage. We're going to look at non-QM mortgages. Non-QM mortgages, or non-qualified mortgages, are designed for those who may not meet the strict criteria required on traditional mortgages. These loans offer more flexible guidelines and cater to those who have more unique financial situations. So let's dive into a couple of the most popular ones. So the first one we're going to talk about today is bank statement loans. For self-employed individuals or those with irregular income, bank statement loans are a great option. Instead of tax returns, lenders analyze bank statements to determine income eligibility. This type of loan allows you to leverage your deposits to secure a mortgage. Typically, bank statement programs go off of 12 months, but there's 12 and 24 months, and there's business and personal. So if you have both of those, or if you have one of the two, we can make it work with bank statement program. Another great non-QM option for people with a lot of assets is called an asset depletion loan. So if you have substantial assets but limited income, asset depletion loans can work in your favor. Lenders consider your liquid assets such as retirement accounts, investments, or savings to calculate your income. This can help bridge the gap when traditional income verification falls short and you need a little bit more income. Another great non-QM product is called a foreign national loan. So these, as the title says, these are for people that are foreign nationals to the United States. So if you live in Canada, you live in Honduras, you live anywhere outside the States and you want to buy property in the States, most likely you're going to have to go with a foreign national loan because you're not a legal citizen of the United States. It's a great option for those people that are looking to buy a property in the United States that don't have any residence here. These loans consider alternative documentation and sources of income, accommodating to the unique needs of international buyers. Another non-QM that isn't really talked about as being a non-QM loan is a jumbo loan. So anytime you have a loan amount that is higher than the conventional conforming limit, that loan is considered a jumbo loan, and those are technically non-QM mortgages. These jumbo loans allow for larger loan amounts, but they do have stricter underwriting requirements typically than a conventional loan. And finally, the last non-QM loan that I want to talk about is called the debt service coverage ratio, or DSCR. These are great investment products. They allow you to qualify not based on your personal income, but based on the income of the property. So as long as your net operating income for the property is higher than your monthly rent or your monthly mortgage payment, the property will most likely qualify under DSCR, and you can go that way instead of using traditional income verification. These loans provide flexibility in underwriting and can accommodate people in situations where maybe their traditional income isn't high enough, but the income from the property is. So these five examples are just a few of the non-QM products out there in the market. There are other ones. These are just the most commonly used and commonly seen. But it is important to note that all these different non-QM programs have different loan terms, different stipulations, different everything. So you really want to get with your loan officer and really understand the program that you're going to be utilizing and the pros and cons of each, because some have prepayment penalties, some have a really high interest rate. It really just depends on what program you're using and what the guidelines for that specific program are. So, so if you are using a non-QM program, know the guidelines, know what you're getting yourself into. They are great for people that need more unique situations than conventional or traditional financing will allow. But it is something that you want to know what you're getting into. You want to know what the terms are. You want to know if you have a prepayment penalty. You want to know all the details. So make sure you're working with a great loan officer, have a great agent partner, and handle the business. So that's it for today's Marlow's Mortgage Minute. I hope you guys found some value in it. If you did, please like, share, subscribe, send it to anybody else who you might think will get some value as well. And I hope you have a wonderful day. Thank you.